Hello and welcome. Thank you for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwawo. Coming up on the show today, Afrexim Bank targets $1.5 billion in financing for trade and related infrastructure in Mauritania. Mozambique to propose debt restructuring plan to creditors on March 20. Plus, Djibouti ends Dubai's DP World contract to run container terminal. Let's get the show started now with the markets, and we're starting off here in Africa where Egypt is closed, but the JSE index in South Africa and the market here in Nigeria were both in the green at intraday. The JSE index was up 0.70% and the NSE was up 0.05%. Kenya was down 0.53% on Thursday. In the Middle East, a rebound of shares in blue-chip Emma Properties continued to buoy Dubai's stock market. Middle East markets are closed today, but on Thursday, Emma climbed a further 1.9% in an unusually heavy trade, helping to lift Dubai's stock index by 0.03%. Saudi Arabia's index was down 0.26%. In Qatar, the index sank 0.25% as Qatar Islamic Bank went ex-dividend, tumbling 4.9%. Abu Dhabi was down 0.09%. In Europe, equities hovered around the flat line on Friday morning as investors reacted to earnings and waited for a report from the Federal Reserve. And of course, a number of data were released today. Let's talk to Conrad. Hello, Conrad. Good afternoon and happy Friday. Thank God it's Friday, I guess.
Thank God. Yes, thank God it's Friday. Everyone here is saying that too, Jimmy. Hi.
Right. So in Europe, the latest update on Germany's GDP, as well as the latest numbers on the consumer price inflation, of course, came out today. What's trading like in Frankfurt on this last trading day of the week?
Well, I have to say, Jimmy, the fact that it's Friday is the most positive piece of information to be happy about here on the trading floors. The economic data did very little to encourage trading. Look at this. Look at the German share index DAX. It's again a very, very, very jittery sideways line. And make no mistake, this little bit of an upswing in the last 2 hours, that's not really optimism. If nothing great changes today, the German market will end the week with a weekly loss or more or less unchanged compared to last Friday. And that has to do with the return of the concerns about higher interest rates in the United States. The positive German GDP data, gross domestic product, the indication for economic growth here in Germany, which we got today, didn't really change that. It was confirmed that the economy here grew by 2.2% in 2017. The concerns about interest rates are only about the United States. They're not about Europe. The minutes of the last meeting of the Council of the European Central Bank, which were released yesterday, show that the Council is very much divided about when to start talking about getting out of quantitative easing, QE, this very generous monetary policy. They don't even want to start talking about it yet. This means that no higher interest rates are to be expected here in the Eurozone for many, many months. Also, consumer price inflation is no pusher. In January, consumer prices increased by 1.3%. That's far away from the 2% target that the European Central Bank has in mind.
Now, Conrad, tell me, what's the impact on European trading of what's reported from China? The government there has seized control of the Anbang insurance company, which used to be very active in the company takeovers all over the world, also in Europe, where you are.
That's true. I would say it's adding to the uncertainty and a certain amount of unease among investors and also certain business people here in Germany, because it's so difficult to judge from where we are here in Frankfurt or Germany what happens in Beijing. It seems that some sort of power quarrels in the high-ranking top officials of China are behind those decisions about Anbang. And all this contributes to an increase of reluctance among German businesses and also policymakers to encourage further investments from China here. Of course, the money is welcome, but the political risk involved might be too high. We've got a case here in Germany at the moment as well. The Chinese company State Grid Corp wants to take over 20% of the German electricity grid operator 50 Hertz. That's one of the 4 large electric grid operators here in Germany. But the government in Berlin says that it is against such a deal.
And for the first time since the financial crisis, the Royal Bank of Scotland has reported a profit. Good news, isn't it?
Absolutely, Jimmy, that's good news. But there is a grain of salt in the earnings report, which is very big and very salty, I have to say. Royal Bank of Scotland says that the fine it will have to pay in the United States, the fine is about malpractice in mortgage selling in the United States many, many years ago. This fine might be huge, up to 12 billion US dollars. That's much more than what even pessimistic analysts so far had estimated. And even though it's quite likely that the fine will not be that high, this will sure eat a large portion of the RBS's earnings 2018. And of course, there's the other impediment looming over the Royal Bank of Scotland and its share price. That's the fact that the UK's government, the state, the taxpayer of Britain still owns about 71% of this bank. Eventually, this will have to be sold, and of course, this will also be some weight on the stock price.
Well, I guess that bank would have to devise some kind of strategy to, deal with some of the losses that will come out from what you've just mentioned. Thank you very much for your time, and it's been a wonderful week with you, Conrad. Enjoy the rest of the weekend.